morning, everyone, and welcome to Forvia Capital Markets Day. It's great to have you all gathered here today. My name is Asha Sampath. I'm going to be your host throughout the day, today and also tomorrow for those who are going to be here. So we all know, or I think you all know, that today Forvia and Hella, under the Forvia brand, operating together, they are celebrating and hosting this first joint Capital Markets Day, and we have a lot in store for you. The group will present Power 25, its medium-term plan, and you will be hearing a lot about it throughout the day. So first, I suggest that we take a look at the program. So today we will start with Forvia in 2025 with some introductory remarks by Patrick Koller, the CEO of Forvia, followed by Hella's Path to 2025 with Michel Favre and Bernard Schaffer-Bartel, the CEO of Hella and the CFO, respectively. We will have a few sessions dedicated to the business lines, the business group's strategic priorities with the different business groups' EVPs. And actually, one session is before lunch, and we'll have 5 other sessions after lunch. And right after the business groups, you will see we will put the spotlight on the 2025 financial roadmap with Olivier Durand, the CFO of Forvia, here on stage. And finally, Patrick will come back here on stage for a quick wrap-up with the main messages to remember, the key takeaways. And of course, we haven't forgotten all of you here. You're also here to interact with us today. So there will be a Q&A session where you will be able to ask your questions in the room. We have hand mics, so you can ask your question if you're bold enough to do this in the room. But we also have the digital platform where you can type your questions in the chat box, and we'll receive it straight away here. And we'll take a few. That will be later this afternoon. So if you're ready, let's begin. Let's start with Forvia in 2025. And ladies and gentlemen, I have the great pleasure to welcome on stage the CEO of Forvia. Please give a warm welcome to Patrick Koller.
It's a great pleasure for me to welcome you here for the first CMD Forvia. You know, we are all very excited to show you our progress, the priorities we have set, and the plan for 2025. But also, we would invite you to have a look on our innovations and our products later on today. My introduction will be organized around 3 topics. The first one is the journey, the Forvia journey. The second one is related to our Power 25 plan. What does it mean? What will it bring to us? And finally, I will also speak about our very strong ESG engagement. So if we start with the step change, which is Forvia. Forvia is the combination between Forvia and Hella, and it is the 7th biggest, largest supplier globally. Between 2022 and 2025, we will grow this group from about 22 billion euros to 30 billion euros, so plus 5 billion euros of sales during this part. This journey will be supported by Power 25. Power 25 will allow us to grow sustainable and profitable. About the journey now. We are Forvia. What does it mean? After the independence from Stellantis and after the transformative acquisition of Hella, we want to benefit fully from the step change in size on the electronic and on the software part, on the contingencies, on the complementarities of our businesses globally, and our leadership positions in all the business groups. You will see later on the presentations made by our colleagues. We are also benefiting from a very strong EV exposure, and I will go more into details of this. And we are, I think, an ESG leading company with one of few achievements which are, I think, worth to describe. We are a techno company, and this is what we want to become more and more. We are investing in the future. How? With our spend on R&D. We will have to optimize it and to be more efficient. And we will speak about this also. With 15,000 engineers, about 3,000 software engineers in 2021, so it's a growing number, as in all our activities we will increase the software part. And working on more than 1,000 plus programs with about 250 to 300 launches per year.
Today's world, it's all about change. Climate, technology, society, the way we live, the way we move. Change is accelerating, so are we. Forvia and Hella, two global automotive leaders, together, stronger, creating Forvia. For better ways to move around, via electrified mobility, sustainable materials, and innovative zero-emission solutions. For a safer, connected, and customized journey, via immersive cockpits, digital and autonomous driving breakthroughs. For the communities we serve and future generations, via our strong awareness of mobility's impact on mankind. 150,000 people across the globe with the bold mindset, methods, and energy to change mobility for millions. We are united in one vision, because mobility is at the heart of people's life and of what matters to them. Moving freely, caring for the planet their own way. We pioneer technology for mobility experiences that matter to people. Carrying this mission, we inspire to let the world keep moving. Forvia, inspiring mobility.
For the first time, we are revealing our new Forvia mission, and I think here the different words count. We pioneer technology for mobility experiences that matter to people. That matter to people is of a very special meaning to me. It doesn't make sense to put innovations in the cars which will make it not affordable. So we have to work all together in our industry to make sure that mobility will work for everybody. And I'm just a little bit concerned that with the electrification, with the autonomous driving, with other transformations, we will have difficulties to achieve this goal. We, Forvia, at least, we will do whatever we can to make this affordable, not to increase the prices, the costs of the cars, while creating value which is appreciated by the consumers. We are a diversified and balanced group. You have here three categories of businesses. If I call them a little bit differently, you have the core businesses, which are electronics, interiors, seating, and lighting. Then you have the special businesses. And why special? Because they are complementary. They are supporting the core businesses and our global growth. I'm speaking here about clean mobility with its ultra-low emissions, which is a cash generator. But I'm also speaking about life cycle solution with its off-cycle resilience, which is also supporting globally the group. Then you have the last, not the least, category, which is new growth drivers. This is the future in which we are investing. It's all what we are doing for the hydrogen mobility. It is including Symbio, our joint venture with Michelin. And it's also, sustainable materials. I do believe that the next significant transformation in the automotive industry, if I put apart the powertrain, will be the CO2, the neutrality. It means using different materials, different architectures, thinking at design stage about recycling, about circular economy. And we want to be engaged in this new journey, and I will show you how. What I would like also to share with you is the quality of our portfolio and the quality of this Forvia group versus our competition. First of all, we believe that we are well positioned and perfectly aligned with three automotive megatrends, three main growth drivers of the automotive industry: electrification and energy management, safe and automated driving, digital and sustainable cockpit experiences. These one, respectively, are considering a growth between 21 and 25 of more than 30% for electrification, more than 25% for safe automated driving, and more than 10% for cockpit experiences. When you look at our order intake, our order book of 2022, we have, a share of 36% related to electrification. And when I look at electronics and software, it is an excess of 30% in 2022. It's not the only criteria we are looking at. The other one is geographies and vehicle segments. The geography which will continue to grow is Asia. Asia will represent in 2025 60 million vehicles out of 94. So 55% of the world production will happen in Asia, out of which 60% in China. We have to be in Asia. In the same time, we have also to control our exposure. So we are working, and this is part of Power 25, to reduce the gap in profitability between the Asian market and the North American and European market. But we believe in this growth, and it is representing 30% of our order intake, the growth being estimated at a very high path, about 5 to 6%. The vehicle segments, the two vehicle segments in which we are strong, it's the premium one, especially in Germany, in Europe, but also the SUVs and the light trucks in America. These ones are very interesting because they are growing faster than the remaining segments, but it's also because their content is very high. And on the top of that, and especially on the premium side, OEMs are very attracted by innovation, so it allows us to be first to the market and then to have the possibility to deploy these technologies on the lower segments. We also are looking at de-risking our customer portfolio. And this is what we do here in 25 with having none of our customer representing more than 20% of our global sales. Olivier will show you this in more details, but you see that our perfect alignment with the automotive megatrends, our perfect alignment on the geography, which is the growing one, but also on the vehicle segments, is making us strong and is securing the growth. You will get it repeated many times, but the growth we are showing is already secured at above 80% for 2025. Power 25, what it is about. We have to address headwinds. Inflation, energy crisis, supply chain disruptions of any kind, cost and availability of money, and all of that will have an impact on manufacturing and demand. So we have to get prepared for this. When we speak about inflation, we believe that until 2025, we will be able to pass through 100% of the material inflation to our customers. But it will not be the case for wages, for energy, for transportation, maybe. So we have to do our part. And Power 25 is this. It is showing that we do our part. But the compensation, the partial compensation on the other inflations is needed and should happen. Power 25 has three priorities. First of all, the sales growth driven by innovation and sustainability. The second one, we want to reduce the break-even point. We want to make it a 3-year plan which might be renewed in the years to come. And I will explain why we believe that this makes sense. And here you see that in 2025, our break-even point should be at 61 million vehicles, which is significantly lower than the market. And of course, we have to improve and to be strong in the cash conversion and our portfolio management, all of that for one objective, deleveraging the company as quickly as possible. So when we speak about Power 25, so you have the sales and you have the sales contribution of Power 25. You have the variable margin, and here we are working with all our sales teams to get the compensation from our customers of the material part. Then you have all the fixed costs, which is the heart of Power 25, and you have the operating margin, the EBITDA margin. On the other side, linked to the EBITDA, you have the cash conversion, and you have the disposals on which we are working. If I look at our volume assumptions, you have on the left-hand side 3 curves. The first one, the top one, is Forvia estimate during our last CMD in 2021. In the middle, you have the last S&P forecast, the forecast made in October this year. And the bottom one, the green one, is our assumption. On the right-hand side, you have, again, the S&P global latest estimate of October this year, and you have it related to the different years until 2025. The orange bar is 2023. So our assumptions, we believe that Europe is at risk, and we have to be conservative in Europe. Europe might even be below this year, next year. We believe the US will stay flat, and we forecast a moderate growth in Asia. This is the picture for 2023. For 2025, I think that we will not be back to the pre-COVID figures, neither in Europe nor in North America. And we might be around 17 million vehicles in both regions, 17 plus minus something. I remind you that we were above 19 million in Europe pre-crisis. I also believe that Asia will continue to grow. When you look at China, the number of vehicles per 1,000 inhabitants is at around 140, where it's 600 in Europe and 1,000 in North America. So I think that there is a growth potential, and it's interesting to be there because not only we have a growth potential in the region, but I also believe that Chinese OEMs will operate outside of China very soon, and maybe even in Europe, or at least taking market share in Europe. The break-even. So we start from 2022 with a break-even at 65 million vehicles. We go down at 63 million vehicles in 2023, and again down to 61 million vehicles in 2025. This means between 2022 and 2023, 150 million euros of fixed cost reductions. And for 2025 versus 2022, 300 million euros of fixed cost reduction. This will allow us, despite the growth of the 5 billion I spoke about earlier, to keep the fixed costs at exactly the level of 2022. And that's critical. On the other side, we work on the net cash flow, on the percentage on sales. Next year, we will be above 1.5% of sales, and we have the target to be at 4% of sales in 2025. It's a detailed plan, and again, Olivier will give you much more figures, much more details for you to understand what we intend to do in these areas. All of that would not be possible without a deep digitalization. The digitalization is a transversal project for us. It starts with innovation and R&D. It goes to finance, to all the transactional part. Clearly also very important in manufacturing, and also the ways we work. We are in the process to do this. It's a driver of productivity with a very short payback, usually below 6 months. We have the organization to deal with this, and it's a common one. And we have named at the XCOM, Christopher, I don't know where you are, Christopher Mogwar, who is responsible for this global digitalization. And I think that this is key. But it's also only working if you have the right cybersecurity organization around it. And I think we have it. We have it through 3 lines of defense: the organization, the governance, and the audit. And in the audit, we are also using red teams on a regular period just to make sure that our defenses are doing as expected. Now, this is the summary of the different priorities we have. Again, with the 3 pillars: drive sales growth through innovations and sustainability, enhance profitability and lower break-even point, generate strong cash conversion, and actively work on the portfolio. So in 2025, the target is to be at circa 30 billion. This is after divestments. You know that we have announced an amount of cash in corresponding to the divestments of 1 billion euros. This is corresponding to about 1.7, 1.8 billion sales. And it is also corresponding to the revised volumes, which are today 6 million vehicles lower than the previous CMD. On the operating margin, we forecast to be above 7%. And as I said, with a break-even point at 61 million vehicles. For the cash generation, we were in 2021 at 1% net cash flow on sales. Our target is to be at 4% of net cash flow on sales. In June this year, we had a net debt to EBITDA at 3.1 times, and our target is to achieve less than 1.5 times at the end of 2025. We had a movie somewhere in between, no? Après, okay. So, to go maybe a little bit more into details about this plan. So the CAGR I'm speaking about is at 8%. It's above 9% before disposals. I said it, 80% plus of these sales are already secured, are in our order books in the dashboards. 38% of all these orders are related to electric vehicles, and I think that this is very significant, and 30% are for production in Asia. The volume mix should help us to improve our profitability. Inflation pass-through, which is an absolutely mandatory topic, and we are well ahead on that. We have made a lot of progress on this. Operational efficiency, including the turnaround of lighting and complete seats, and you will see this being presented by the corresponding business groups. Forvia synergies, we spoke about we will deliver more than 250 million of synergies, and Michel will come back to this point and confirm it. And of course, we have to work on R&D and SG&A efficiencies. On the portfolio management and the cash generation, from less than 3 times, but this is what I just said, 3.1, which we had in June, and less than 3 times in December, to less than 1.5 times at the end of 2025. 1 billion euros of disposals, this is something which we confirm, and even more, and Olivier will speak about this. We will go down on the CapEx side from 5.5 to 4.5%, and from 8.5 to 7% on gross R&D percentage of sales. Deleveraging, this is our objective. It's our main objective. You will hear it many, many times during today. So our goal here is clearly to go down from 3.1 June 2022 to less than 1.5. We want to reduce the debt from 8.4 billion to about 6 billion. We want to do this with the cumulated net cash flow generation of more than 2.5 billion. We will do it also with the 1 billion of divestments I spoke about. You see here the dividends. I'm speaking here about all the dividends, including the dividends to minorities, and we have, the IFRS 16, which will a little bit increase, understanding that we have some investments to be made. This is key. Before we go to ESG, I hope at least that I was able to pass through to you that we have a strong group. We are very proud to have made this acquisition of HELLA. Together, we are significantly stronger, and we have the critical size and the leading positions, the techno bricks, which will count for the next future. With Power 25, we have the midterm, but also the short-term reactivity. It is clear that it will be more and more difficult to work with budgets, and that we have to replace that through much more dynamic tools. And I think Power 25 is giving this possibility. On a monthly basis, we might also work on the fall-through performance and the cash conversion. And this is, the way we will organize ourselves. We are prepared for that. We have taken assumptions which you've seen are conservative, at least prudent, significantly below the ones we had the last time. And we, are able, and Olivier will do this, detail the plan. Now about ESG, we have strong convictions about ESG. And this is not new, but I think we have made some nice achievements. We are the first automotive company worldwide having got their validated net zero, and for us it's in 2045. This is a significant journey. It has to be very detailed. It's scientifically checked, yeah? And you need to have a realistic plan to achieve it. The way we do it also is related to the sustainable material, because we need the biomass in order to got to the net zero, and I will speak about this later on. But our intermediate objectives, scope 1 and 2, you know them, I repeated them many times, at neutrality in 2025. And we have an intermediate target for 2030, which is minus 45% on the scope 3, which means something, because when you think about developing a car within 3 years, you don't have a lot of vehicles in front of us, or generations of vehicles in front of us to achieve it. We might oppose what we are doing on the CO2 with the interest of the company, at least from a financial point of view. This is wrong. This is wrong, and we say this from the beginning. And if I take scope 1 and 2, we are very happy that we have started at an early stage to work on the energy consumption, on the self-energy production, on the PPAs, on the different materials we are using. And you see it here. The energy bill for the group, for Forvia, the combination of Hella and Faurecia, was at 182 million euros in 2021. We were able, the 41 million, this is the energy saving. It's 20%. The reality of our exit point, 2023, will be 25%. 30% in 2024, 2025. On the other side, you have 4, it's the starting. We will have invested in 1 million square meters of solar panels. We will be able, as an exit point 2023, to produce 7 to 8% of our global energy demand. We hedged, of course, and this also supported our equation. But nevertheless, we will have to pay 80% in 2023 more than in 2021. It would have been 300% without these measures. And this is something we have to continue, and we are working on this full power, and we will continue to integrate ourselves on self-production of energy on the different sites. I think that many companies might have some bad surprises when they will do their budget for next year on this. This again is the second premiere after the mission, Materiact. Materiact is a new company, and rather than words, I think it's better to see the video.
It's a race against time, a race for the climate, a sustainability race that challenges us to act and curb climate change. We frame everything through the lens of sustainability. We are acting with unique, cutting-edge low and ultra-low CO2 materials, bio-based, recycled, carbon-captured compounds, bio-based foils, low CO2 carbon fibers, and green steel, enabling us and the industry to reach net zero ambitions. From waste management to renewable materials, our entire ecosystem is mobilized to act. We have more than 10 years of experience. Our engineers, scientists, and researchers are working together to develop the best sustainable materials. From predictive and adaptive formulation to processes and applications in automotive industries and beyond. All of this to prepare for a better future thanks to sustainable materials. Use better. Use less. Use longer. This is how we act. We are Materiact. Materials acting for the planet.
This new activity will be based in Lyon. We will count quickly 400 engineers working on the different compounds. So we are fully legitimate on the plastics, and the way we are dealing with this is that we know for which application these plastics are formulated. And if you are mixing virgin materials with recycled materials, with biosourced materials, you are increasing the structural viability of this new compound. And it's important, first of all, to identify what is this new viability, and it's not so easy. It needs sophisticated algorithms and artificial intelligence. But when you have this knowledge, you need to understand how you will compensate this new viability through an reduced process viability in the transformation. And this is where we are legitimate. It's where we can bring to the automotive industry real new solutions. And we are, I can tell you, attractive with this activity to a very large number of customers with who we are already in contact. What is key here is the feedstock. And to make sure that you have the feedstock in the requested volumes of the automotive industry, you need an ecosystem. And it's important to be quick, to do that rapidly. We hope that as much as we engaged ourselves in hydrogen at the right timing, it's also the case for MATERI'ACT. And you see here that we want to improve by more than 80% the CO2 versus state-of-the-art materials, and we want to do this quickly. We want to have more than 30% of recycled materials in our plastics interior of vehicles in 2025, which is really tomorrow. And we want to make with this activity over 2 billion euros of sales in 2030. So there are a combination of internal sales, but also external sales. And even if we are not perfectly clear with the ratio, but it will be something between 70-30, 60-40. To give you an idea about this, in 2022, we bought for 1.6 billion euros of plastics, and so it's about 2.2, 2.3 billion in 2025. This is not the only activity of MATERI'ACT. You saw it in the movie. We are also looking for buying green steel, which is one of the materials we are using, and we are well advanced on this. And we are also considering other materials like carbon fiber, which are used in the hydrogen storage tanks, where we are working with some innovative groups, consortiums in Europe, but also in the US, to have the right spec for a very much reduced price using biomass. We are not only speaking about CO2 in the company. We are also speaking about caring about water. We are also speaking about biodiversity. And as an example, on biodiversity, what we did, we, on a voluntary basis, we asked all our sites to identify a group of people who will care about biodiversity around them. And with ONGs and with some softwares, we are able to define very precisely what are the animals which might be in danger around these locations. And we are acting, so we are doing countings under the control of these specialists, and we are acting to increase the populations which might be at risk. This is for this part, but also, of course, of diversity. We are very much focused on diversity. You have here two figures which I think are important. 35% women in our group of managers and professionals in 2030, and 30% women in our top management group. We are on track. It takes a little bit of time. We would like to be quicker, but we are on track and we will make it happen. So, the last slide for my introduction. I just would like to tell you that we have the organization, we have the governance to be able to execute flawlessly all the synergies we have identified. All we have identified, and we are capable to work together very well in order to improve also, the revenue synergies, and we have some good examples already. Related to the objective, deleveraging the group, it is very clear that we are not considering in this plan to buy the minority shares on the market. The shares belonging to the minorities on the market, you have understood. Yeah? So I think that this was an important statement for you. And with this, the next speaker is Michel, and I think also you, Bernard. The floor is yours.
Thank you. Thank you, Patrick, for this comprehensive overview of the midterm plan. And now